Okay, good evening, everyone. Welcome to today's weekly market debrief. We'll start with the S&P 500 index on the screen now. Okay, a recap from last week. I mentioned that the US, right? Last week was somewhere around here. We are waiting for one more down leg. So what happens is the following few days, market has sell down. Okay, so this sell down is roughly about the same length as the first sell down. Okay, and what we are seeing here is the past two nights, okay, has some rebound happening. There's some buying up happening. Now for the S&P 500, most of the stocks are still on the downtrend, or it doesn't really have a big buy up. The reason for this up move, right, is mainly contributed by the Nasdaq stocks, or mainly the big tech firm companies. Okay, why I say so is because you look at the Nasdaq, is mainly two green bars, two green days. Now, if we look at the Dow Jones, Dow basically had a much bigger sell down. Okay, and is the weakest among the three index. Okay, so most of the Nasdaq stocks are also in the S&P 500 index, and that has contributed to this rebound. So it's mainly still the tech sectors that are still in play. Okay, so for at this moment, what I'll be expecting is probably a few more updates now for the US, and then it might start to consolidate again. So we would like to see how this one turns out. So for this at this moment, what I will say is it will affect the Asian market in a positive way. Like probably might see a few updates or maybe a sideways kind of neutral market. So the thing that has moved is the gold. Okay, move as in move downwards, and it retests this low done in the previous sell down. Okay, so at this moment, gold is still in a consolidation phase. So we just have to wait for those who like to accumulate gold for the next run. If you think that the US is continuing to print money, which I believe so, they will, as they are going to keep the interest rate at a low rate till 2023. So most likely in the long run, right, probably in the next 2-3 years, most likely gold will continue to rally. Okay, so probably this is going to be a rest, as I mentioned. If you look at the weekly charts, right, it's going to take a few weeks or few months, right, for this consolidation to finish. Okay, so we just have to wait for this like 50-day or 40-day moving average to catch up with the fundamentals or with these technicals. Okay, so it'll take a few more weeks, a few more months, for this consolidation to finish. Okay, so that's for the goal. Now for Hang Seng Index, our Asian market, Hang Seng has not been doing well. It broke this support, and is retesting the next support. This is not a really good sign for a strong rebound, but nonetheless probably will still be a weak rebound happening. In line with US, what is happening with the US. Okay, so we just have to it doesn't bode well for the Asia market for this Hang Seng to come out with such a pattern. Whereas for China, China is still strong and is trading in this consolidation, as mentioned for many videos really. Okay, so it's still consolidating. Whereas Singapore is still the weakest market, okay, in the global market. Okay, and recently it start to break down when the US starts to sell down. Okay, the good thing is it's still hovering around this 2050 sorry 2450 sorry 2450 2480 kind of range to 2005. Okay, so this region, right, is a strong support, and people are thinking the banks, some of the banks, Singtel, even Singtel right now, they are publishing to be a good buy. Okay, so but I think otherwise. Okay, but the thing is, this is still, I would say, it might be drifting down, okay, in a slow manner, like in a slow fashion, drifting. Okay, so until we have a real big move, it's difficult for it to change trend. Okay, so for Singapore market, the strong ones are still the REIT sector. Some of the REITs like Fraser Centrepoint. Okay, Fraser Centrepoint had a retracement and is testing the 200-day moving average with the 50-day attempting to cross over. Okay, so this might be a like a turning point for this to like this is the low point, 250 to 255, right? This is like the support region, okay, for it to turn up. Okay, so if you do like dividend investing and trade trend together, this could probably the area to accumulate. And possible region probably is $3. Okay, that was its previous high, which I doubt so because that was like pre-COVID period, and now we are still having a COVID period. Though I would say businesses in retails have been recovered like 60-70%. Okay, whereas that's mainly for malls. But if you look at F&Bs in, I don't know, I recently I went to Clarke Quay and some places, a lot of the F&Bs are quiet or their business are shut down. Okay, so most of the F&B that is still thriving, still surviving are mainly in the malls. Okay, so this is one. Razor Lock, as I mentioned last week, um, it has already broken up the resistance. Okay, Fraser Logistic Trust, as I mentioned last few weeks, that it has already broken up, it's strong and broken up the resistance. Okay, and past 2 days has continued to trying to rally again. Okay, so this is still a strong stock. CDR Hospitality Trust, today there's a up move in line with some of the banks are recovering from the morning selling. Okay, so this is still a base pattern, is trying to do a reversal pattern, and we will want to look to see if we can break above this 112, 113. Okay, so probably it's also due to the measures by the government giving the vouchers for people to do staycation in hotels and tourist attractions. So CDR Hospitality Trust, even Far East are more like the beneficiaries of this scheme. Okay, so this is Far East Hospitality Trust. Okay, so it basically break out, pull back, and it's right now trading at the 200-day moving average, area. So it's probably trying to go up and or down. It depends. Okay. All right. So with in line with the CDR Hospitality Trust, most likely the direction will be upwards, for them, due to government intervention, in supporting the tourist industries. Whereas for some of the other REITs, they all had a reaction to their 200-day moving average. Okay, so this is like Suntec REIT. I mentioned it has a nice rally, and then it had a reaction to the 200-day moving average, selling down. Okay, so at this moment, it tried to recover, which means to say this gives as a momentary short-term support at 144. Looking at Mapletree Commercial Trust, also having a similar thing. It had a slow rally and then it tests its 200-day moving average and turn down, or there's a sell down. Okay, so most likely it's going to rest again and probably try to make a third attempt to break the. No, this is the first, this is the second. The third attempt to break the 200-day moving average. Capital Mall Trust and Capital Commercial Trust both also have similar pattern. The attempt, but before it hit already started to sell down. Okay, so we just probably just have to, you will have to consolidate a little bit further for this. So most of the other REITs are also showing similar signs, similar patterns, like even Sasia REIT has been consolidating very quietly for the whole past few months, no, 5-6 months. In such a consolidation, as it gets to be tighter, right here at the resistance, you might want to look for a trade for it to go long. Okay, so at this moment it's still consolidating. So be mindful when it's starting to trade at around 78 half cents. We just have to watch out for this. Okay, there's some movement in the medical sector. Okay, I do not know whether it's just a short-term rebound or what, or it's a reaction to news that Europe is going to have a very bad second wave happening. Okay, so if if they are continue to close down, even like UK is giving some um, rules or laws to make wearing of mask mandatory for frontline workers and all this stuff. So they are probably going into a second lockdown. And if that happens, which means to say Europe is still going to be close to Singapore for the next 2-3 months, and probably that might drive the demands for protective gears again. Okay, so this is medtech, and the past 2 days have a rebound, probably in a reaction to the $1 psychological area. Yeah. Okay, so this is the previous area of rest, and then now it's retesting this place again. Okay, so this is medtech. Riverstone similarly is consolidating. Is doing this. It's like a pattern or consolidation pattern. Okay, so once it move out of this range, most likely you might start the next move. Okay, it's doing a down pattern. So it's 1, 2, 3, 4, 5 is like a down flag pattern. So most likely it might possibility of it breaking on the above the top side is higher. Usually healthcare is the one that looks more promising. Okay, mainly it retraces first and then it rested sideways for some time. So this is a good sign. Okay, with the support here around 216, 215, 216 area. Okay, so if it starts to trade upwards, then it will be good to buy some like as a punt, for trading. And we have hyphen pharma. Okay, not too sure what happened, but today there's a rally here happening. Okay, after this big rally, it basically died down, and then now we have a new rally, bounce off the support. Okay, seems to be something happening. I need one to check on the news, know what is happening with this hyphen pharma. Okay, the past 2 weeks I've been seeing a lot of requests about SIA. Okay, so I know it's a national carrier. A lot of people travel with SIA, take SIA plane before. I also do like to take SIA plane. Okay, flights out. So because there are some rebound happening, people are still asking, can we invest in SIA? So to me, I still don't think so. Okay, firstly, let's look at the operational stats of SIA. This is April. Okay, and its full service carrier is down 99.6% compared to the April the year before. Okay, it's down 99.6%. Now May we have down 99.6% also, and June 99.3%. Okay, slightly better. Now with this April, May, and June, previously I mentioned that they had a loss of $2 billion. Okay, they raised $8 billion from their rights issue, and then they have roughly about 3 billion in cash. They have 11 billion. They lost 2 billion cash per quarter. If you do a calculation, 2 times 4, we have 8, maybe 5, then probably SIA can only last like 5 quarters. Okay, that is like one and a half, one year and 1 quarter, or probably if they stretch a bit, 1.5 years before they run out of cash. Okay, now if we look at July, a slight improvement, like 1%, no, minus 98.7%. We look at August, it's still minus 99.3%. Okay, so the thing is there isn't much improvement, even though they start to open borders with like Malaysia, Brunei, Australia, and such. So I would say it's still too early to invest in SIA. I think they are still going through a cash burn, and despite all their layoffs is mainly all the lower rank staff, which their pay isn't that high. So, and most of them do not have high basic pay anyway. Most of their pays are low basic pays, especially the crews, because they go more on their OTs, their attachments and flights, to get their so-called higher rank salary. Okay, so all those layoff, I don't think is going to help SIA bottom line, and I think they are still going to lose like 1.5 billion and up for the next quarter. All right, so I think for me, I will still wait. I will still wait probably till when this number starts to catch up. Like for passengers carried, 32,000 passengers, you can start to go back up to like 500, 700,000 passengers. I think they are starting to recover. Then I think it's time to invest in SIA. So at this moment, to me, I still would not uh, buy or recommend SIA. Okay. Now SGX recently had a big news. Okay, that they just listed one of the ETF for Chinese government bonds. Okay, so I think it's a show that the China market is picking up, is growing. The world investors are taking notice of China, and they are all looking for ways to invest in China, especially their government bonds. Okay, so with the recent news, SGX had a big spike. Okay, so I think this is a good sign and might likely start to turn around. Okay, so you might want to look for a trading opportunity here for those who do short-term trading. Okay, this to just catch on this momentum of this rally. The stock or the Chinese ETF bond that they list is the ticker number CYC. This ICBC CSOP Chinese government bond ETF. This CYC is for the Sing dollars. So you can buy this if you want Chinese government bonds exposure in your portfolio. All right, you can look into investing in this. Okay, so we'll look at the bank stocks. So the banks, DBS, OCBC, more in line with what the STI is doing. Okay, DBS is a little bit weaker among the rest, as it has this sell down. It break the support and sell down. Okay, so it had a mini rebound. Okay, though it's not that good, as today's rally has a low volume. Okay, so most likely I would think it's a short-lived kind of rebound, probably a test here and come back down again. Okay, test the trend line and back down. OCBC has been very spotty, slow trending, so most likely it's also going to drift downwards. Okay, and you can see the selling yesterday has more volume, higher volume. Okay, and also so with today's rally with less volume, most likely it's going to be short-lived also. Similarly, so in terms of trading, I don't think they will have a strong rebound so soon. Singtel also similarly, because of the today's past few days news brokering house, they have been advertising to buy Singtel. You know, Singtel is its lowest price in 12 years. Okay, $2.20. Um, Singtel is still showing signs that it's drifting down, and this kind of movement, similarly, it shows like it's going to probably do a small rebound, and then it might start to drift down again. Okay, it haven't shown signs that it will reverse. The main thing like reverse, right, is like something it has a very big move, big gaps, and this kind of like tail from here, no big tails buying back up with high volume. So this type of volume is still very low. So it is not. I don't think it's any signs that you will rebound or turn back up like this. Okay. So I think we still can wait. Now the sector that will start to come back up again, I would say, is the tech sector. Okay, it might take some time for after the REITs has finished its move. So this is venture, one of the stronger ones. Okay, after this strong rally, it's been resting sideways. With this about 850 holding well. Okay, so we might want to look at this for it to turn up. Probably when it starts to trade above like 1940 or 1950. I know previously AEM had been the strongest one, but it seems to be seriously this whole thing. I do not know what they are doing, what is happening. But if we take Q from Intel, which I think is their biggest customer or maybe only customer, Intel. Intel hasn't been doing well. This gap down is due to earnings. Earnings is not favorable, and they are going to be earning soon again. So to me, they might not be performing that well, considering that I mean in the tech space, AMD Ryzen is challenging Intel chips very strongly, and on top of that, Nvidia's graphic card has just came out with a new range of graphic cards that's like mind blowing. You know, so I don't think Intel might be able to compete, you know, in the short term period, and such maybe it will affect AEM's bottom line. Okay, so at this moment, probably I will not touch AEM yet. Yeah, so probably I will not touch AEM. Firstly, because of those Intel news and its competitors, and this pattern that's happening here. You know, this is one big sell down. All right, so I do not know what's happening here. Okay, whereas the rest seems to be finding nice support. This is UMS. Okay, UMS has been I think it has found its support near its 200-day moving average, like 92 to 95 cents. Okay, so it's been holding well around here. So if it starts to turn up or buy back up like 98, 99, you can look into buying into this. Valuetronics previously was the weakest among the Singapore tech companies. Okay, but it has been trading sideways, holding well at above this 525. Okay, for like 1.5 weeks. You know, if you carry on this way sideways, right, then this is you might want to consider this, you know, with 525 as the real base support. And Silver Lake axis. Okay, Silver Lake axis is still consolidating. Um, the volume is getting very, very low, which is good. It's a nice thing. So if we check out our weekly chart, yeah, I can see it's getting very low. Okay, it's getting probably maybe 1 or 2 weeks. You might start to see Silver Lake moving again. Okay, so just keep all this in your watch list, and watch out for these stocks.